Hey guys, welcome to the game plan. So I was just having a little bit of fun playing a little Super Mario Brothers here, but welcome to the game plan. We have so much to cover today. It's really incredible. The CPI numbers just hit, and we're actually going to go into what the charts are telling us. So again, I don't want to waste any more time. Let's get right into that action right here, folks. Again, in fact, there is one thing I want to show you guys. So what we got here, this is from my personal collection, 100 ounces of silver. I'm going to be giving this away at the end of this month. On the last day of February, we're going to do a drawing for this 100-ounce bar of silver, weighs over 8 pounds. And basically, all you have to do is follow Verified Investing on Twitter as well as on YouTube. One or the other, or both if you want double the chance to win. But again, a 100-ounce silver bar right here, man. It's going to one of you guys. So make sure you follow those socials, get it on, and we will see who wins later on. All right, let's take a look here at what we have on the charts. CPI data just hit. I want to go to a couple things here. So if we flip over to the data points, let's talk a little bit about our headlines. So headline CPI showed a 0.3 of an increase in January CPI, rising to 3.1%. On an annualized basis, both numbers were hotter than expected. Now, this is the kicker, right? Yesterday, it was all about, oh, it's going to be below 3%. It's going to come in at 2.9%. And what have I been saying, guys? I mean, literally, if you've watched this game plan for the last 6 months, I've been saying that around 3%, it's going to get sticky, and we're going to start to see it uptick. And that was my whole thesis why I think the markets are ultimately going to sell off at some point this year. Well, again, what are we starting to see? Inflation becoming sticky. Core CPI also rose 0.4% to 3.9% year over year. All right, so again, this is some big stuff here. We're looking at higher than expected numbers across the board. Markets are getting crushed here pre-market. We're going to find out if they ultimately stay that way, or are we going to see a rebound, a buy the dip? The buy the dippers aren't dead. They're going to try to get involved here and bring this market back up. But one thing you have to understand, guys, is that if inflation was moving back to the 2% number the Fed wants, much easier for them to cut interest rates, right, and get that stimulus going again, versus if we're starting to uptick. Now remember, this happened in the 70s, and I've told you guys, I've shown you charts on this, that in the 70s we had the initial pop on inflation, the Fed tightened, it came back in, then they started to loosen too quickly. Now you could say, well, the Fed hasn't loosened too quickly. Incorrect. And the reason why it's incorrect, you can look at M2 money supply. You can look at the liquidity in the system. Basically, the reverse repo. I don't know if you guys know what reverse repo is, but basically it was the ability for banks to park money at the Fed, which took money out of the system to park it at the Fed, and the Fed was paying banks to do that. That's essentially now not happening anymore. So all that money that was parked in the Fed is now back in the system. You add in the stock market, and I've said this. I've said the wealth effect creates inflationary pressures. Listen, I could go on and on with this stuff. You guys have heard it from me before. I've been telling you exactly the game plan for how this was going to play out, and it's starting to play out. All right, a couple other things, and we'll get into the charts on CPI in just 1 second, but let's talk a little bit here. Yesterday, we did see the Dow Jones Industrial Average hit a new high here of just under that $39,000 level, right? So again, 38,927. JetBlue today surged as much as 15% before the bell on news that activist investor Charles Icahn is getting involved there. Again, we'll see what that does when the markets have come down so much. Bitcoin continues to hover. After the CPI number, we did see a dump on Bitcoin. As I said yesterday, I shorted just above 50,000, just a starter position. And again, I got to just chuckle on this, is that the amount of uprising on social media, it honestly cracks me up. It's less like, it's almost like snowflakes, right? You just can't handle like someone trading Bitcoin versus being a maxi and just holding. And again, folks, I mean, this is what I've made a living on for 24 years, is literally trading, buying and then shorting, and then buying and then shorting. I think I've made 10 trades now since 2021 when Bitcoin was at 69,000. Every single one of them on Bitcoin has been profitable in my service. So there you go. All right, so going on, Shopify getting crushed here, guys, down 10.4% pre-market. Their earnings were good, but again, it comes down to costs. They're incurring a lot more costs. That's going to affect revenue, a lot of things like that. And then Datadog's down just a little bit. It was down more pre-market, but it's honestly come back a little bit here. We'll see where it is throughout the course of the day if the markets continue to sell. Hasbro, not so great on the earnings numbers here as well. Hasbro, again, the stock is down. And then lastly, I think this is a really important point here, guys. If we look at this market blast headline, nearly 20% of commercial real estate loans are coming due this year. That's 60% more than the previous estimates. $929 billion in loans will require refinancing. This is going to put more stress on the system. If you've been looking at charts like NYCB and other banking stocks, there is a major catastrophic issue going on in the commercial real estate sector. It's been masked by the Federal Reserve. It's been masked by the government basically securing depositors in these banks. But the question is, does it bleed through to other sectors? And that's the biggest fear. All right, into the other charts we go. We got to look at this, guys. This is huge right now. So look at this. This is your Fed Watch tool. What is the Federal Reserve expecting to go on here? And we were, remember, expecting a cut in May. Well, guess what? No longer. The market is now not anticipating. Based on today's CPI reading, the market is no longer anticipating. Notice it's still staying right in this column where we are for the March meeting and the May meeting now at 5.25 to 5.5 on the Fed funds rate. So that is a huge change in market expectations for what the Fed's going to do. Next, you have to look at where the markets are saying. So the markets now are pushing out first rate cut to June. I just want to make one more kind of, in a weird way, it's a little funny. You got to chuckle at it. Is that from last year, the Fed has said 3 rate cuts and not starting basically till the second half of the year, right? Well, guess what? Basically, the markets are slowly moving in that direction. And it's like, if the market just believed the Fed, we would already be in that position. But the markets were not. Now they're slowly being forced to go into that situation. I am curious about Jerome Powell's comments on what he's going to say here. Now, let's get right into some charts here, guys. So if we flip over to some charts, look at the massive move on the U.S. dollar this morning. That is a huge move. And notice this, a lot of times you pop up initially on the news and then it kind of retraces. We're not retracing. The dollar's just going higher and higher and higher. That's going to hurt Bitcoin initially. We're going to see gold down, I'm sure. We'll take a look at gold in just a minute. We'll take a look at other things as well, including the stock market. But this is huge. But what I want to show you here, I had another target that I had for you guys on the U.S. dollar. The target, again, was this down-sloping trend line. And just to show you, again, where it comes from, because I think it makes a lot of sense when you look at the bigger picture, is if we zoom out on this chart, right, you have this point of high pivot. This is the highest point on the dollar in recent history, okay? Then if we move down here, we have this area, and look at what we're hitting right now, that level. Now, what's crazy about this is that if the dollar breaks through this, and remember, right now it's fractionally above it, that doesn't equate to a breakout. I need to see a close above, and I need to see a confirming move. Otherwise, it's just a fake out. But if we do break through this, you're now talking about the dollar going here, which would put more pressure on the markets, right? So again, why is this bad? This is the worst case. So jobs numbers, we got a jobs report recently, and the jobs numbers were actually very good, and the market rallied on them, even though good jobs numbers make the Fed probably not want to cut. But again, that's showing you a strong economy. The problem now is when you have inflation going up, it doesn't matter about the economy. The economy could get weak. It could stay strong. The Fed still cannot cut rates like the market wants. Because, again, remember, you cut rates. If the Fed cuts rates, what do you think inflation is going to do when more money flows into the system? It's going to continue up. And that's the problem. If you're already seeing an uptick with the Fed funds rate at 5.25 to 5.5, what do you think is going to happen when the Fed starts cutting rates? It's going to go up. And all of a sudden, again, in the 70s, it was, again, I've shown this before. 70s, it was like this, and it came down. Then it was this, then it came down, and then it was like that. And that was the final move. I think this is where we are right here, or this was where we were at the peak. We're probably right here starting this next move to the upside. Okay, next up, let's quickly go on, guys, to the 10-year yield. The 10-year yield now is piercing a key level of resistance, heading to my secondary target, which I've talked about. I said to you guys a while back, we were trading at 3.9% on the 10-year, right down here. And I said to you guys, we should see a bounce on the 10-year. The 10-year could go as high as around 4.37 to 4.4. Well, guess what? We're very, very close to that area right in there. So keep an eye on this zone, 4.4%, give or take. I think that's your next key target. Next up, let's take a look at the S&P 500. In fact, you know what? Let's go to the spiders first so we can see what the pre-market is doing. As you should expect, the markets are getting absolutely annihilated here. This is your pre-market data right here. Look at that drop. Yesterday, just to put this in perspective, where did we close yesterday, guys? We closed right over here. Right? So again, you basically closed, in fact, let me just see here. No, we closed right over here, right in this vicinity. So you're talking about a close at a little bit above 500 here, and look at the drop that we are now. We're down 6 points or over 1% on the S&P 500. Now, don't forget, this is not the end-all be-all. Markets are not now going to start to collapse. There's going to be people that are going to buy the dip. The buy the dip trade has been working, so people are not going to change that. They're going to buy the dip. The bigger question is, when they buy the dip, do we make new highs or are we putting in a top? One thing that makes me think that we could be possibly at a high pivot here, in fact, there's a few things. Number one, if we look at the, let me go to the daily chart of the S&P 500, look at this channel here. Right? So again, look at that wedge pattern, this wedge pattern from here that connects this high right through here, and look at what we tagged yesterday. Then you have this one here, here, and here. Okay, so that's number one. We were right at the high end of it. The other thing to look at is if we zoom in on this chart and we look at what formation of candle, and I talked about this in Trading the Close yesterday, guys, this is a topping tail. Topping tail right there. Topping tails are reversal signals. The fact that it came at that high end is something that we pay attention to as technical traders. Now, the one thing I want to be clear, for me, and I've said this before, unless we break this lower wedge pattern trend line, right? So we very clearly have this line here to here to here. So you're basically watching this zone. And I've said this in many of my game plans, Trading the Close. If the markets can hold this line right here, then they're technically safe. If you break this level, which again, let me get you approximate price today on it. All right, that would be around 49 on the S&P. It'd be around 49.50. If we close below 49.50 and confirm, now you're into potentially a much bigger corrective move on the S&P 500. All right, let's keep going, guys. We got a lot to cover here. Yesterday, SMH. Take a look at the SMH right here. This is a monthly chart. Again, we did tag a level here, and we also put in a topping tail on that. This is going back to 2015, and I don't want to forget about this trend line, which I discovered just in the past couple days, which is this one on the monthly QQQ chart. To be honest, the further the trend line goes back, the more powerful it is. And this is powerful right here. This is the dot-com bubble right here. All right, take the high of the dot-com bubble, connect it through the exact high of 2022. What did we just tag right there? That's big, guys. I mean, you're going back now 24, 25 years on a trend line, and we just tagged that after this meteoric rise. So are the signs here for a major top? Yes. Let's watch the key breakpoints, right? I'm very hesitant to say, oh, it's definitely the top, because we know so many times it's looked like it and hasn't been. But let's watch in the coming days. We know our levels to the downside on the S&P. If that should break, now we're in business. Couple other charts here to go over real quick, guys. This is the Microsoft chart. We had a reversal candle yesterday on the daily chart right off of this longer-term trend line. Again, that could be a top on Microsoft in the short term. Think about this. Microsoft alone, the market cap is bigger than the entire Russell 2000. And again, you guys know that's been my kind of one bull play here of being long the Russell 2000. And so far that's worked out well, although today we are seeing it down just a little bit. Shopify getting hit on earnings here, down trading after closing yesterday. Looks like it closed around $89, trading at 78.5. If we look at the technical levels for the day here, on this chart, so we're at 78.5. Let's see. All right, so there's a gap fill at 76.60. Again, let me draw it in right here. So right there, 76.60. And then really for me, if you're looking for the safer, and listen, there's no such thing as safe, right? Anything investing, you're going to be taking risks. But this high with these highs around it, this zone right in here, right? This zone is going to be the big area here, but that's not until you get down to about $67 to $68. But that would be a huge area if we really saw a big drop in Shopify. All right, I got pulled just a couple other charts here, but we're going to jump over to commodities. I do want us to keep an eye on NVIDIA today. In fact, let's take a look at the pre-market. NVIDIA is getting tagged today, guys, almost at 700. That's a big drop for NVIDIA. We did see a doji yesterday, but again, a doji's not as important as a topping tail. The SMH had the topping tail. NVIDIA had a doji. Let's watch to see again how this trades today. Do we get a big reversal day, an outside bar day that engulfs multiple days? That could be significant there. All right, just quickly, guys, we're going to take a quick 30-second break to just go over and thank Itust Capital. Itust Capital continues to sponsor this broadcast, and I do appreciate them to the nth degree. They offer some amazing things there. So here is a 30-second break from Itust.
Do you have an existing IRA or retirement account? Itust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is, they make it simple. All you have to do is transfer your preferable amount of USD through Itust, and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through Itust Capital.
All right, guys, we are back here. First of all, of course, we're going to start with Bitcoin. I know Bitcoin is a favorite out there. Again, beautiful move up here. Now, I want to show you guys why I shorted, right? This is the thing, is like, again, people who don't understand technical analysis, they don't understand the thought process behind it. And number one is I could be wrong. Now, generally I'm not, but I could be. And again, the first thing to note here as a technician, if you've taken the Winning Trader series, if you've taken the methodology that I teach, is you had a time count. All right, 1, 2, 3, 4, 5, 6, 7. Moves generally stall out after a 7 move in a direction. So right away you have that on your factors. Number 2, we had a double top at this pivot point, which we pierced, but ask yourself this: did we confirm above the level? And the answer is no, you didn't confirm. You closed above. Closing above is not confirming. Another factor is if we look at a longer term chart, let's go to the daily chart. Let's zoom all the way back to 2019. We take that same high pivot that I've used before, connecting it through the lows of the bull market here, and we drag that up, and it connects perfectly through the $49,000 high and right to this current high. And again, I can zoom in on that, and you guys can see exactly what I'm talking about. So there you go. If we zoom in, we tagged an even number, and even number is another important thing for Bitcoin, as well as obviously this upsloping trend line. So again, there's always a method to the madness, and it doesn't guarantee success by any stretch, but it ultimately puts me in a position where I'm looking for a quick swing trade, right? So for me, as a trend, what am I looking for? Well, to be honest, if we just pull back, let's say we take this low here, all right, we go down to, let's go down right to here, right? And we take that low and we extend it right out, right here, right? So very simply put, as a swing trader, that's all I care about. I couldn't frankly care where Bitcoin goes in the next 6 months, the next year, the next 5 years. In fact, I have a tiny hodl position, which I had more back down at 17,000. But again, that's the long term. For me as a swing trader, I can make so much more money by playing these highs and lows over and over again, just like when I was short up here and we covered right down here on the last trade. Well, now I'm short up here, and if we come down here, exit again. Simple as that. Now, would I be a buyer as a swing trade there? I'd have to see. I have to reevaluate the trend line. Yes, the trend line is pretty solid. There might be an opportunity to swing trade long there, but my longer term epic level remains at around the 30 to 32,000 range, right? So again, I feel like a lot of people have talked about this now after I've talked about it, so it's possible that it's not as good. But if we just draw a trend line right here, we can very clearly see that you take the bull market lows here from 2021 right here, right through here, all right, and it kind of just connects right through these highs. So if we ever got a pullback there, that would be kind of the no-brainer buying opportunity on Bitcoin. All right, on we go, guys. Let's take a look here. ETH is continuing to power up here. If we look at Ethereum, again, we had our very direct lines here. We had the inner channel, which was parallel to the bigger channel. We've now pushed above this high, which generally means we should have the option to test this high right up there, which is right around 27.75. Will it break that in the near term? I don't know. All I know is that's resistance, just as simple as that. Couple other things here. We got to look at gold, guys, because gold is breaking down. Again, short-term breakdown, though, and I want to be clear on this. This is a short-term breakdown. It really does nothing to the bigger picture in terms of the inverse head and shoulders. But again, if you're just looking at the short term, we have a very clear trend line right here, right? Right there, and then we're breaking right here. All right, so where would this go? Well, first support would be right here, right? You're looking at 1975, and then you're looking at a couple other levels right in there. So again, short-term breakdown. I don't think this really changes the narrative for gold that inflation is starting to climb. In fact, it could even add fuel to the fire that once you see a run from safety that lasts more than just a one-day event like today, the end goal is people are underinvested in gold, underinvested in gold miners, and that could be an asset to go to in that scenario. All right, but again, it is trading down today. Silver is down a little bit here, so I guess that gold, that silver bar here, wherever it is, oh man, it's heavy. But again, I guess this is worth just a little bit less today, but still, 100 times $22.30. You guys can do the math on that. And again, as I said, guys, don't forget, follow Verified Investing on Twitter and on YouTube. That gives you 2 chances to win. We'll draw from the total group, or you can follow one or the other and you get 1 chance to win. It's just that simple, right? So it's just a matter of deciding what you want to do. Starting, by the way, so you guys know, I want to start doing more and more giveaways, whether it's gold, whether it's free services, whether it's whatever, or just cash. And I've ordered a wheel. It's going to be a prize wheel. Every time this game plan airs, I'm going to be spinning that wheel, and we're going to be giving away stuff that's probably going to start in March. So this is till then, this silver bar, the 100-ounce bar. And once we get into that point, it's going to be giveaways every single day to those people that are following the verified investing accounts. All right. On silver, guys, by the way, just going back to silver, larger channel, right? So again, silver I still think could go down to here. But again, you're just stuck in this longer-term consolidation pattern. I still am overall long-term bullish. All right. Palladium. We got to talk Palladium, guys. I am getting very interested in actually purchasing some Palladium as if this isn't Palladium, right? Palladium's much more expensive, but I am interested in purchasing as we're getting into some levels here. Look at this. You go back to 2001 on this chart of Palladium. You connect it through this high and through this low here, and you get this area here. This first level, look at how we're coming into a zone here. I would say between 875 and 750. I haven't purchased any recently yet in terms of Palladium, but I am getting very interested here in terms of maybe picking some up. I will keep you guys posted if I do. By the way, my goal here is, and a special shout out to Kitco, who has been a great partner, is I'm hoping that they supply us with a monthly amount of gold or platinum or whatever they want in terms of giveaways, so we can give away more stuff to you guys out there that are loyal watchers here, that comment wonderful things and support us. Means the world to all of us here at Verified Investing, and especially to me. All right, lastly, I want to just quickly touch on oil. Oil, we have this potential breakout here on the short term. Let's quickly go into that. It's still too early to know where this candle is going to close today, but again, it is above this down-sloping trend line. You'll have a little resistance at 79 right here, but remember, we still have this inverse head and shoulders, which technically is still in play. It never failed, right? So again, to fail, it would have had to get below this trend line here, and right here, right? And it never did. It got right here. So it's still technically in play with a target of $80 to $83. So I still think that's a possibility. And by the way, if in the next month, so February started right here, we're going to get the CPI data a month from today, right, essentially. If oil does go up here, do you think that's going to be a positive or a negative for CPI? It's going to be, for at least, it's going to be a positive for CPI going up, a negative for all of us that are concerned about inflation. So there's a lot of things here that are starting to be a little concerning that the Fed is going to have to deal with. Of course, I'm going to go over natural gas, guys. I know you guys always want my natural gas, especially considering how volatile it is, and natural gas just getting crushed again. Look at this drop. Basically, this is what happened when the CPI came out. So essentially, the idea is the Fed will be unable to stimulate, which is going to hurt demand. And again, you have natural gas collapsing here. I did add a little bit more to my UNG position yesterday, just dollar cost averaging, slow and steady wins the race. The positive is we're coming into major technical levels here. If we go to our weekly chart, and we zoom out here, you can go back to 2020. The COVID lows are around 150 to 160. So we're getting real close here to those COVID lows. And the nice thing about a commodity is that ultimately it's a commodity, right? At some point, they'll produce less of it, and ultimately price starts to go up. Vice versa, when price is high, they mine more of this, they drill more for oil, they do all these things, and it brings price down because there's more supply out there. So again, as supply starts to come offline, I would generally expect this to turn around, and I think you do get a bounce back to 225. How much above that is tough to know. All right, guys, that's really all for me today on the game plan, but I just want to say, you guys continue to rock it. You guys continue to be great supporters. Thank you so much for being a great team, following us here at Verified Investing and following my game plan and supporting me. You guys have a great rest of your day. Take care.